Good day, students. You're welcome to LODS lecture series. I'll be taking you through a quick tour on AC304 Principles of Auditing. This video is for session 1, Nature and Purpose of Auditing. Do enjoy yourself as we go through this video. Introduction. Auditing is regarded as one of the most recently established professions, born out of the complexity of the modern business world. All entities have the same basic audit requirements. The difference is just in matters of degree. Hence, auditors' responsibility as regards the objective and general principles governing statutory audit of financial statements prevails. Outline of session 1. When you have studied this session, you should be able to explain the concept of audit. You should be able to describe various objectives of audit, and you're able to highlight advantages of audit, and you're able to discuss various types of audits, and lastly, you're able to discuss various preparations before the commencement of audits. Nature of audit. The word audit is derived from the Latin word audire, which means to hear. An auditor is a person appointed by the owners to check accounts whenever fraud is suspected. It was to hear explanation given by the person responsible for financial transactions. Latest definition contained in the auditing standard and guidelines of the Combined Council of the Accountancy Bodies (CCBA) is as follows. An audit is the independent examination of an expression of opinion on the financial statements of an enterprise by an appointed auditor in pursuance of that appointment and in compliance with any relevant statutory obligation. Also, auditing is broadly defined as a systematic process of objectively obtaining and evaluating evidence in respect of certain assertions about economic actions and events, to ascertain the degree of correspondence between those assertions and establish criteria and reporting the results to interested parties. Auditing usually covers a particular period of time. Auditing may be narrowly defined as a written report on the examination of financial statements for a particular period of time. The International Federation of Accountants (IFAC) recognizes the responsibility of accountancy profession and considering its own role to be that of providing guidance, encouraging continuity of efforts, and promoting harmonization, as deemed it necessary to establish an international code of ethics for professional accountants to be the basis on which the ethical requirements, that is the code of ethics, detailed rules, guidelines, standard of conduct, etc. for professional accountants in each country should be based. Scope of audit. The scope of audit is increasing with the increase in the complexity of the business. It is said that long-range objectives of an audit should be to serve as guide to the management future decisions. Today, most of the economic activities are largely conducted through public finance. The auditor has to see whether these larger funds are properly used. The scope of audit encompasses verification of accounts with an intention of giving opinion on its reliability. Hence, it covers cost audit, management audit, social audit, etc. It should be reminded that an auditor just expresses opinion on the authenticity of the accounts. He has no power to take action against anybody. In this regard, it is said that an auditor is a watchdog but not a bloodhound. Objectives of auditing. Auditors are basically concerned with verifying whether the accounts exhibit true and fair view of the business. The objectives of auditing depend upon the purpose of his appointment. We have primary objective. The primary objective of an auditor is to report to the owners of his business, expressing his opinion whether an account exhibits true and fair view of the state of affairs of the business. It should be remembered that in case of a company, it reports to the shareholders who are the owners of the company and not to the director. The auditor is also concerned with verifying how far the accounting system is successful in correctly recording transactions. He had to see whether accounts are prepared in accordance with recognized accounting policies and practices and as per statutory requirements. secondary objectives of auditing. One, we have detection and prevention of errors. Errors are committed unintentionally because of ignorance, carelessness, etc. Errors are of many types. We have errors of omission. These are the errors which arise on account of transaction into being recorded in the books of account, either wholly or partially. If a transaction has been totally omitted, it will not affect the trial balance, and hence it is more difficult to detect. On the other hand, if a transaction is partially recorded, the trial balance will not agree, and hence it can be easily detected. Errors of commission. When incorrect entries are made in the books of account, either wholly, partially, such errors are known as errors of commissions. E.g., we have wrong entries, wrong calculations, postings, carry forward, etc. Such errors can be located while verifying the account. Then we have compensating errors. When two or more mistakes are committed which counterbalances each other, such an error is known as compensating error. E.g., if the amount is wrongly debited by 100 naira less and wrongly credited by 100 naira, such a mistake is known as compensating error. Then we have error of principle. These are the errors committed by not properly following the accounting principles. This arises mainly due to the lack of knowledge of accounting, e.g., revenue expenditure may be treated as capital expenditure. Then we have clerical errors. A clerical error is one which arises on account of ignorance, carelessness, and negligence. Then we have location of errors, which is the second objective. It is not the duty of the auditor to identify errors, but in the place of verifying accounts, he may discover the errors in the accounts. The auditor should follow the procedures in this regard. The auditor must check the trial balance. The auditor must compare list of debtors and creditors with the trial balance, and he must compare the names of accounts appearing in the ledger with the names of accounting in the trial balance. Then he has to check the totals and balances of all accounts and see that they have been properly shown in the trial balance. And lastly, check the posting of entries from various books into ledger. Then we have the third objective, which is detection and prevention of fraud. A fraud is an error committed intentionally to deceive or to mislead or to conceal the truth or as a material fact. Fraud may be of three types. We have misappropriation of cash, we have misappropriation of goods, and lastly we have manipulation of accounts. Advantages of audit. The following are the advantages of audit, which include: audited accounts are detected as an authentic record of transaction. 2. Errors and frauds are detected and rectified. 3. It increases the morale of the staff, and thus it prevents frauds and error. Then 4. Because of his expertise, the auditor may advise on various matters to his clients. Then we have an auditor act as a trustee of his shareholders. Hence, it safeguards the financial interest. Then for taxation purpose, auditing of accounts is needed by the tax authority. Then in case of any claim is to be made from the insurance company, only audited accounts should be submitted. Then even in case of a partnership firm, auditing of accounts helps in the settlement of claim at the time of retirement or death of a partner. And we have audited accounts helps in managerial decisions. And lastly, they are useful to secure loan at the edge of amalgamation, absorption, or reconstruction. Disadvantages of audits. Like most things in life, audits are not entirely without their disadvantages. There are two main points to make here. Audit fee. Clearly, the service of an auditor must be paid for. It is for this reason that few partnerships and even fewer sole traders are likely to have their accounts audited. Then 2, the audit involves the client staff and management in giving time to provide the information to the auditor. Professional auditors should therefore plan their audit carefully to minimize disruption which their work will cause. Types of audits. The following are the types of audits. We have statutory audits, we have periodic or annual audits, we have interim audits, we have balance sheet audits, and we have cost audits, management audits, continuous audit, etc. Statutory audit. Any audit carried on as per the requirement of law is called statutory audit. E.g., all companies have to get their account audited as per the provision of the Companies and Allied Matter Act, Cap PL 20, Laws of Federation of Nigeria 2004. Then we have annual audit. This is a kind of audit where the auditor verifies the account at the end of the financial year. He starts the audit work after the closure of financial year. This is a common audit and is most used by small organizations. Then we have interim audit. This is when an audit is conducted to a particular date within the accounting period. The auditor may attempt to audit the figure for a month or for a quarter as the work may require. And we have partial audit, when an auditor is asked to audit only a part of accounting system. This is called a partial audit. Then we have lastly balance sheet audit. This is a kind of partial audit and is concerned with the verification of only those items appearing in the statement of affairs. Preparation of audit assignments or steps to commence an audit work. An auditor, after receiving the appointment letter, should communicate his acceptance or otherwise in writing to the company. The following steps are necessary to commence the audit work. 1. If it is not a statutory audit, you should find out the exact nature and scope of his duties. That is, whether he has to audit the account or prepare the account also. Then you should inform his client to close all the books of account and keep them ready for verification. Then he should acquaint himself with the nature of his client business. Then the auditor should examine the efficiency of the internal control system. You should obtain the names of directors and their power, then their duties. Then you should obtain a complete list of books and documents maintained by the client. You should also obtain a copy of previous year's audit reports. And lastly, you should go through various documents like memorandum of association, articles of association, prospectus, etc. We have come to the end of this study session. Hope to see you next class for study session 2, where we'll be discussing internal and external audit. Thank you for listening. Bye.